Good evening, everyone. Welcome to closing comments here for March 5th. Let's jump right into our charts and see what happened in these markets today. First up, we got our April live cattle on the board. We did have a little quieter day here across this cattle market, both live and feeder markets balancing out here today as it did test some of this overhead resistance. This April live contract seeing a nice opening range push up there to 240 today. Strong rally out the gate right up there to 240 before those sellers from last week's point of control stepped in and pushed this market back down a little bit. We did just kind of balance out in a tight little range here throughout the rest of the day, finishing almost unchanged there, just right above 238.5 again. At the moment, those bulls failed to make a push here through this overhead supply zone, and those bears seem to be waking up and stepping back into this market here. Tomorrow's trading session is going to be important. How we finish out this week should be a strong indicator of what kind of week we're going to have next week. Bears want to continue to provide some resistance here and try and attack these prior day lows. If we get pushed down here below 237 to 237.5, offers below that area should get this market selling back down here into the low 230s and set us up for some more downside into next week. However, if those bulls are able to stage a stand here at 237 and keep on pushing through this overhead supply zone that we've created from last week, strong close back up here towards 242 should open the door for some upside into next week. So just look for this box to be a continued battleground here as we go into tomorrow's session. How we finish out this week is going to be important, as that should give us some strong indicators of what next week's going to look like. So look for the bears to try and make a stand here. Bulls need to keep this market held up above these major averages to have a chance going into next week. But in the meantime, I encourage everyone to be defensive, still be cautious here, as we still could see some selling pressure continue to step in from this prior week's point of control that started our breakdown last week. So in the meantime, just be cautious here. Watch out as we go into the last trading session of the week. We should have a better idea of what this market's going to do as we go into next week. Just wait and see what happens as we go into week 10. Next up, we got our April feeders on the board. Similar story over here. This feeder market balancing out near the top end of that prior day's range. We did see this thing briefly poke above that prior day's high, but still seeing good selling pressure here from last week's point of control in this market as well. Early rally here was pushed back all the way back down to about 357.35. This thing kind of settling in here right around 359 into the close, but seeing the market balance out like this after last week's breakdown here, looking like this might just be a little bit of a dead cat bounce. Sellers stepping in and offering some resistance here right around 360 to 361. This at the moment, we still want to be defensive here in this feeder market as well. We should see these sellers try and attack these lows tomorrow and drive this market back down towards 350. How we finish out the week is going to be important for this feeder market as well. Strong push below today's low and back below our 50-day moving average here for the bears would set us up for some more downside into next week. Bulls need to continue to defend this 50-day line and see a push back up here through this overhead supply zone to set them up for a rally next week. In the meantime, this is going to be a battleground here, so tomorrow's action is going to be important. At the moment, the bears seem to have the upper hand here, as they've got a little bit of selling pressure stepping back into this market from last week's breakdown. So everyone be defensive here, and let this market kind of settle out here throughout this week and give us a better picture as we go into next. But in the meantime, be cautious as the bears are trying to make a stand here, and we could see them create some selling pressure for this cattle market as we head into the last trading session of the week. Next up are May corn futures with a nice strong rally here today. Prices seeing a little bit of slippage yesterday, falling back down below that 444 range lows. However, good support down there at those averages. Saw a nice rally here today, pushing right back up into the middle part of this range. At the moment, we are testing that inventory that's left over back here from that January 12th breakdown. In the meantime, this market should just kind of diddle around and chop here in the middle of this range. With the bullish move here today, we want to see those bulls continue to drive here across into the top end of this range, where we still expect to see these range conditions hold between 444 and 464. We expect to see this range-bound action continue here in the near term. While we're chopping around here in the middle of this range, we expect to just see some tight choppy action, kind of like we saw throughout this couple month period in the last part of 2025. A lot of choppy action here in the middle part of this range. as the bulls do have a little bit of momentum here. We should see them try and make a push back up towards these highs, but that's about all we can really give them here at the moment, as we have entered this prior range, and we expect to see these choppy conditions continue. Crude oil prices continuing to rally here today. Another volatile push up there to 82 as we continue to see some action over there in Iran. More volatility here this week, and we don't expect to see that slow down here until we get a little bit more information and de-escalation out there in the Middle East. In the meantime, expect some more Wild West action here in this crude oil markets, as they're going to be super susceptible to the news, and we should just see this thing continue to be choppy here. However, we continue to expect to see resistance up here towards the $80 mark. We're going to be pretty volatile and have some spikes as we are trading in this area. But over the past year or so, we continue to see some resistance up there at 80 with each one of these desktops we have over there in the Middle East. And short covering rallies, $80 is about the cap on it, so we're not really expecting to see any more upside for this crude oil market, barring any more escalation. In the meantime, just expect some wide choppy ranges here and more sloppy action in this crude oil market. Next up, the stock market indexes continuing to see some choppy action. We did see the Dow have some weakness here today, briefly undercutting the current week's low, and a pretty nasty close here today. Financial sector really weighing on things, and some of these leaders that have been part of this Dow index are starting to slip. We are still seeing a pretty mixed bag over here in these mega cap tech names, which has resulted in continued chop here in the Nasdaq and the S&P. However, we are starting to lose a little bit of ground. We are starting to slope off here, and not quite getting that upside we want to see here for these bulls to keep this range bound. I encourage everyone to be defensive here as we are testing around these range lows. Things are starting to, cracks are starting to form, and things are starting to get a little bit more slippery here. We still could see a slip down here below these range lows, but at the moment, they are continuing to hold. Tomorrow's close for the week is going to be an important one here for these indexes. The Dow, which has been the leader, has now started to slip and fail here, so that's not a good sign, as that should start to weigh heavy on these other indexes. So look for a little bit more of a corrective move here as this market does start to slip below these range lows, and the Dow is starting to pull back down below the current year's opening range. At the moment, this market's just not looking super good. There is some glimmering spots out there where there are some leadership and some strength, but this market continues to start to see weakness slipping into some of those other areas as well. So now might not be a bad time to be a little bit defensive here. Once these indexes get cleaned up and we've got a little bit cleaner picture from those mega cap names, that'll offer better opportunity for some upside. In the meantime, we either expect some more choppy action at best, or we could start to roll over into corrective territory with a weak finish here by the S&P and the Nasdaq as we go into tomorrow's session. So look for these range lows to hold, and if we do start to see some more volatility and these lows start to slip, we'll start to raise cash and get out of the way, as things could start to get slippery from here. That's all we got for this week. Thank you everyone for tuning in all week long. We will catch you over the weekend for a Week 10 market watch. That's all we got for tonight. Stay safe out there. We'll catch you guys this weekend.